What is going on, everyone? Anthony Drew Gary here, host of The How To Show, where we talk about optimizing life, money, and happiness one how-to at a time. This week I'm going to go largely off script, and we are going to postpone what I had to talk about this week because, frankly, the state of the stock market is worth spending some time on this week. And if you've paid any attention to it in the last handful of days, you've noticed that it's starting to resemble an amusement ride or a roller coaster. I think last week the stock market was down anywhere between 10 and 12%. And then this week it started up 5%. And then the middle of the week where we're back down to maybe where we started at the beginning of the week. And I really just want to talk about that for a minute and what that means for somebody who maybe isn't in the world of day trading or not in the world of actively looking at the stock market on a day-to-day basis. I just want to take some time and break that down for what that means for the common person and maybe how you should think about it and if you should or should not do anything about it. So over the last couple of days, it's not out of the question that you've either heard or maybe you've said it yourself that you've lost a ton of money in the stock market over the last week or 10 days, whatever your time frame is. And I just want to put that into some sort of frame of reference as to whether or not that money was really lost or just maybe a different way to think about that. So typically in the stock market setting, let's go ahead and frame this in the scenario of investing for retirement inside your 401k. It's common that people use the stock market to purchase either stocks or mutual funds to put that money to work inside the retirement account. And so when you buy when you buy into the stock market with your withholdings from your paycheck, that money is not purchased into the stock market using dollars and cents in the sense that that's what it's always going to remain as. When you buy into the stock market, you actually buy shares of either the stocks or the mutual funds that you've identified within your portfolio with whatever's available from your employer. So when you think about it in the sense of last week, somebody saying that they lost thousands of dollars or hundreds of dollars, whatever it is, the reality there is that the shares that those folks have purchased over the years have gone down in value by hundreds or thousands of dollars. It's not to say that they've actually lost money if they've not pulled it out. And I think that's an important part to talk about today, that the reality is that those shares are still the same number of shares that they were a week ago, 2 weeks ago, 3 months ago, but maybe they're worth less right now because the overall market is down. But it's important to remember that the shares are still the same amount of shares that they were a couple of weeks ago. So when somebody says that they've lost a ton of money, that's not necessarily true unless for some reason they've actually sold some of their shares. Their shares are just not worth as much as they were last week or 2 weeks ago. I once heard an interesting illustration to start to put some light into how this really feels. And maybe you might consider your investments in the stock market similar to riding a roller coaster. Now, the roller coaster is going to go up and it's going to go down, but all told, no one gets hurt on a roller coaster unless they jump off the ride before the ride is over. And so to think about that in the sense that yes, the stock market is down right now, but statistics and really the history of mankind's world of investing the way we know it is that at some point later on it will end up at a higher point than it is right now. So if you're in a panic right now, I would recommend that you not log into your investments every day or anything like that because, yeah, it might look a lot worse than it did 2 or 3 weeks ago, but the likelihood of that staying that way permanently is not very good. Even in the scenarios of 2008, 2009, 2010, when those numbers were really, really low, for the most part, all of that has battled back, and it's no longer the issue that it once appeared to be 10 years ago. I think we'll find the same sort of things are going to hold true this time. So all that to say, don't panic. Yeah, there are dips, but there are also going to be opportunities where those dips will wash away. So stay the course. If you've got an investment plan and you're working on that with somebody, now is not the time to panic. Just keep doing what you're doing. And I just wanted to bring a little bit of content to that to hopefully ease some fears that the sky isn't falling and that it will end up being okay. That's going to bring this episode of the show to a close. Hopefully you're getting some content that's valuable to you. If you are, leave me a comment and let me know what that was. If you haven't already hit the like button for the YouTube algorithm, you know it's not too late to do that. And if you are not subscribed to find out that the newest video is up every Wednesday, you ought to do that too and hit the little notification bell so that you can be the first to know. If you've got an idea for a future topic on the show, please send it to me, and we'll see if that makes sense to get somebody on as a guest star or either something that I can cover on my own. And until next time, this is Anthony Drew Gary, host of The How To Show, signing off.